morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. One of the most important data which is going to come in the next week is US inflation data. Now, last time US inflation data came at 3.3%, and it is expected that US inflation can come down below 3% for the first time in last 3 years. Now let us understand why we are expecting it to come below 3%. So before we understand why we are expecting it to come down, let us understand US का जो inflation होता है उसके composition क्या होता है. So there are 8 items into it, and 3 items like food and beverages, housing and transportation, they constitutes 70 to 75% of the weight. And if you see across all 8 items, only apart from housing, everything else have been falling. This gives a clear-cut signal that in the US there is a deflationary trend, and housing also we expect it to come down. Once US starts cutting interest rate, then people will start buying houses and they will not go and stay in a rented house. If US inflation comes below 3%, then dollar index will correct and move towards 102.50 to 103 kind of level, which is positive for all emerging market and Asian currencies. If inflation comes above 3%, then dollar index might move towards 104.50 to 105 kind of level. The probability of that event is only 15 to 20%. So 80% chances we are expecting that dollar index will come down. Now let us discuss outlook for rupee. So basically, if lower inflation in US means lower dollar index, and which is positive for rupee. But there is one more concern which a lot of exporters and importers have been asking us, that Indian equity market is trading at all-time high and the valuation seems to be very expensive as compared to other countries. If Indian equity market starts correcting and FII starts pulling out their money, then rupee might move towards 83.5 kind of a level. In last 1.5 months, they have taken out money close to 2.5 billion from Indian equity market, and they have invested close to 4 billion in debt market, and we expect them to continue to put money in the debt market in one form or other form. Technically, the pair has started making lower highs. It means that earlier 83.40 was a resistance, then 83.30 resistance आया, then 83.20 and finally 83.15. It is clearly indicating that the pair has entered into a downward trajectory, and for near term 83.20 to 83.25 is going to act as a very, very strong resistance for the pair, and gradually we are expecting the pair to move towards 82.80 and 82.50. A lot of exporters have been saying that rupee is trading in a narrow range between 83 and 83.30. Then what is the advantage of a booking a forward? We are not going to gain much. But let me give you an example. If some exporters who have been doing that constantly, they are in the money now. Now, for example, we suggested one of the client on 15 September that you go and book a forward. At that point of time, the spot was at 83.20. If he would have booked a forward for 15 Feb 2024, his forward rate would have been 83.47. आज के दिन पे उस forward का value है 83.04. So basically, he is in the money by 43 paisa. Similarly, in the month of October also, जब rupee was trading close to 83.25, 30 kind of a level, if he would have booked a forward, then he would have got a rate of 83.70. As compared to today's date, the forward would have been in the money by 66 paise. So basically, we can conclude that if someone is booking forward on a constant basis for, say, receivable which are coming in the month of February, he would have been today in the money by 50 पैसा. अगर किसी का साइकिल बड़ा है और वो मार्च के लिए बुक करते, he would also been in the money by 53 पैसा. So basically मैसेज यही है, क्लियर कट है कि एक्सपोर्टर्स को बुक करना है और इंपोर्टर्स को वेट करना है. Now let us end with a strategy for exporters and importers. For thin margin exporters, we will suggest them they should cover 90 to 100% of their exposure between 83 to 83.15. If someone wants to wait, they can keep a strict stop loss of costing or 80 to 90, whichever is higher. Strategy for thick margin exporters like textile exporter or engineering exporters, we will suggest them that between 83.10 to 83.25 they should hedge 80 to 85% of their confirm order, and if someone is hedging on an anticipation basis, they can keep a hedge ratio of 60 to 65%. Now let us discuss strategy for importers. Cover near term and cover slow are the two important mantras for importers. So between 80 to 90 to 83.10 they can cover 50% of their imports which are due for next 30 days. For remaining exposure they can wait with a stop loss of 83.30. With this I will end my today's presentation. जय हिंद, नमस्कार, फिर मिलेंगे नेक्स्ट वीक. थैंक यू.